Good morning, this is Dave Toth with an RJO MRT technical webcast update on the soybean and soybean oil markets for Thursday, October 7th. Starting off here with a long-term weekly log scale chart of the soybean market. We're growing increasingly concerned about a larger degree peaking and reversal environment stemming from the combination of the market's recent failure to sustain prices above the November 09 1080 area high, the upper boundary, the former upper boundary of the past year's broader lateral range. The fact that we had an outside week last week with a higher high and a lower low than the previous week and a lower close. That's typically the sign of some kind of weakness and vulnerability. And that recent, at least interim vulnerability lower is particularly worrisome given the extent to which the large spec community has its neck sticking out on the bull side, with an 87% reading on our MRT bullish sentiment index, reflecting 204,000 large spec long positions versus just 30,000 short positions. Whenever you get some semblance of a market failure, like we've shown here on a daily scale, a bearish divergence in momentum below recent corrective lows around 1079, that combination of at least interim weakness with such extreme bullish sentiment leaves the market vulnerable to a larger degree reversal lower. That said, you can see on this daily scale here former resistance from the 1050 to 1057 area exposed as new prospective support that thus far the market has been holding. On a short-term perspective, we think one of the keys, there's going to be two key technical levels from a short-term perspective in the days and perhaps even hours immediately ahead. On this recent sell-off we've had over the past week, the market has shown previous support in the 1079 to 1082 area that, since being broken a couple of days ago, has thus far performed well as new near-term resistance. If the market can, as long as the market stays below that resistance area, generally around 1082, we have to be concerned that at least the short-term trend is down, and this could morph into a much larger degree reversal lower because of how extreme the bullish sentiment is. However, if the markets can start recouping levels above 1082 and especially the 1107 corrective high from September 30th, that will expose this recent relapse attempt as a three-wave bull market corrective sequence that could expose sharp gains to new highs above 1135. So in sum, we're advising traders to approach this market with a high degree of flexibility, more conservative risk assumption, and to look at toggling positions deftly around this 1080 to 1082 area, coming at it from a neutral to cautiously bearish perspective while the market remains below that area, and neutral to cautiously constructive or bullish if and when the market can recover above 1082, and then certainly constructively if the market can recover above 1107. Moving to the soybean oil market, and very interestingly, we're also worried about a larger degree peaking and reversal threat for a couple of factors. First of all, our MRT bullish sentiment index is historically extreme at 77%. This is the highest since the January 08 period. That accompanied that first quarter of 08 major peak and reversal. You can also see here on this weekly log scale chart that the market has recently respected the exact 50% retracement of 2008's entire collapse from 72.69 down to 28.16. However, certainly from an intermediate to longer term perspective, the trend remains arguably up. And from a daily perspective shown here on the heels of September's breakout, impulsive breakout above the August 16th high at 43.39, this former resistance from the 43.39 area has thus far held very nicely as new support. In that regard, the longer-term uptrend remains arguably intact, and we can approach this recent sell-off attempt as a corrective one ahead of a resumption of this bull trend to new highs above 45.45. We believe that bullish prospect has increased as a result of overnight's prices above yesterday's 44.05 high. Recently in electronic trading, it looks like the market's trading around 44.20. So the market's short-term failure to hold prices below the initial counter trend low at 44 the figure. When the market broke that level a couple of days ago, the market's failure to hold prices below 44 the figure has exposed this sell-off attempt as a three-wave and thus bull market corrective sequence that we think defines a terrific risk-reward buying opportunity from this 44.20 area with a tight protective sell stop just below 43.42. For as long as that 43.42 holds from October 4th We can view this sell-off attempt very objectively as a three-wave and thus bull market corrective sequence that should yield to new highs above 45.40, and we'll discuss a specific buy recommendation later on this morning. In sum, a cautiously bullish policy is advised, with weakness below 43.42 required to change the directional complexion of this market potentially significantly given the extreme bullish sentiment. But as long as that 43.42 low and support remains intact, we believe odds are still with the longer term bull trend to eventually new highs above 45.40. Now please stay tuned to updates on these and other markets on our rjomrt.com website, and good luck with today's trading.